Good afternoon. I'm sitting here in Havre, Montana with a good friend of mine, Curt Barnekoff.
Hi, Keith.
Curt and I have worked together for a number of years, and Curt gave me some big news here a while back. He said he's transitioning out of his practice. And I said, Curt, there's too many farmers and ranchers in North Montana that are counting on you to do that. And you said, well, I'm sorry, but it's going to happen. So I just wanted to spend some time chatting a little bit with you, Curt, today, and maybe get a few pearls of wisdom from somebody with the great background and ideas that you have with regard to practice. So first of all, could you just tell us a little bit about yourself and your practice?
Well, my wife and I and our first child moved to Havre in 1982 to become a CPA in a Highline family. We've been here ever since. I tried my hand at a lot of different aspects of public accounting, and didn't take me long to center on farm and ranch business and taxation and trying to be as good of a consultant and an advisor to those families and their businesses as I could be to help them manipulate through the world of taxes and the maze of all of that, and in probably the last half of my career really focusing on helping them with the succession planning for their farm and ranch businesses, and that's become a passion of mine and really where I've tried to focus lately.
Yeah, and that's where you and I have worked together.
Yep, right.
Well, so sitting here today, Curt, we're in middle of 2021. I want to talk a little bit about maybe going forward, but what kind of advice would you have for a farmer and rancher that maybe hasn't done any planning yet, but they're starting to think, oh, maybe I'm not going to be here forever, and maybe I need to think about Junior or my daughter taking over. How would you suggest they think about their succession planning?
Well, the first step is to start and to recognize that we're not immortal. We'll all be gone at some point. We might die when we're still in business, or we might retire and transition out of business before that happens, but it's going to happen. And if you've got family members involved in the business, and they most likely have a lot of questions about what the future holds and what their opportunities are, and what the older generation's expectations and needs are as well. And oftentimes our farm and ranch families, they work together 15, 20 hours a day, every day of the year, but they don't have these discussions and have clarity of understanding of what everybody's got on their minds, because it's hard. It can be really, really difficult to talk about what you want and what you need, and how you want to provide for not just the people who are on the farm or ranch, but the other members of the family who might be living elsewhere, but are still part of the family. And so important thing is to start, just to make a commitment to start the process. And that's not easy. It's scary. Sharing feelings, sharing desires. Oftentimes there's differing opinions, and the thought of a potential confrontation with your son or daughter or spouse who you've been in business with your whole life, just the thought of a potential confrontation or disagreement, that keeps many people from starting. So there's ways that professionals can help. And that I think we've found in our own way a way to connect with many of our clients, to work with them and their advisors, like you, Keith, or their banker or their insurance person, or even sometimes just a real good friend of theirs, to help them get started with the discussion. And there's programs, there's platforms, there's methods to use, and you get somebody involved that you trust, and start working through it, and just start plugging away.
Yeah. Well, here we are sitting in mid-2021. There's all kinds of proposals coming out of Washington. If you had to give some advice to a farmer and rancher now about some issues to be focusing on, or maybe some steps to take, what would you say?
Wow, it is it is a pretty crazy time right now. Even though my retirement date is coming up pretty quickly, I still am keeping in touch with what's going on a daily basis. And some of the proposals that have been introduced proposed and introduced legislation in Washington are just so different than what we've been accustomed to for our entire careers, and really for probably 2 or 3 generations on the family farm and ranch. And some of it seems kind of crazy. The thing to recognize is that, the proposals that are out there are probably not going to be passed exactly in the form that they're proposed in, but many of the proposals have a common theme, and that is tax laws are going to change, and they're probably going to change in a way that is not viewed as positive or beneficial for our farm and ranch business clients. Fact of the matter is there's a lot of debt that's been incurred in large part due to the pandemic and the stimulus packages. There was debt before that, and that needs to be paid for some way, somehow. The bills that are out there, they're in large part a messaging kind of legislation that's being marketed to the American public to get us prepared for some kind of a change that's going to happen. And to kind of stick our heads in the sand and pretend or hope that nothing's going to happen, I think that's a formula for a bad end result. There is going to be change, whether we like it or not. And so the best way I know to protect yourself and start posturing is to get an understanding of what those changes appear to be like, even if they're uncomfortable. Talk about it, get with your advisors, get with your attorney, your CPA, your financial planner, your banker, and just start the conversations again about what if this and what if that. And there are certain classes of financial net worth, people with certain dollar amounts of net worth that are probably going to be more affected than others. Right now, the estate tax laws will allow a husband and wife to pass well over $20 million of net worth to their family or their heirs, free of concern from federal estate tax, and that number is probably going to decrease. Even if this new legislation is not passed, the laws that exist today say that in 2026, that exemption is probably going to be, on a combined basis, around $13 million. So some of the proposals now are talking about a $3.5 million exemption per person. Yeah, so that would be a $7 million combination for a married couple. And I guess if you take those dollar amounts and you start saying, what if? I think you can come to a pretty quick conclusion that if you've got net worth of $8 to $10 million or more between husband and wife, you should be thinking about what moves you might be able to make to mitigate any or be ready to make to mitigate negative results from this.
Yeah. Well, as I think about it, I think that to deal with those really substantially reduced exemption amounts, it's going to require some planning. It's going to be a big change, and to get a person's mind around that, you don't just decide that in one day. So I'm telling people, we ought to be sitting down, and if you're concerned about this, we ought to be sitting down and talking about it, so that if it looks like in 3 months or 5 months or whenever a change is on the way, we're ready to at least seriously look at it and maybe do something, as opposed to just starting our discussion.
Right. We've when I say we, I mean myself and our team of advisors here. We always work in teams, and got a very, very bright younger CPA partner of mine in our Havre office. Her name's Dana Springer, and she has been working with me for years in the family business succession planning arena, and we work a lot as a team with our clients, and we have other people throughout our firm's footprint, and we pretty much try to work in teams so we get multiple perspectives for our client. But anyway, we're having a lot of conversations with clients right now, and in many cases, people are really not even aware of what their property is truly worth on a market value basis. I think in the last 2 weeks, I've probably had very serious conversations with at least 4 or 5 significant farm ranch families who are calling to get an independent appraisal of their real estate holdings so that they know. The real estate market has exploded, especially in certain parts of Montana. And then even along the High Line, in certain pockets along the High Line, it's exploded more than others. And you really need to know what you're dealing with value-wise. So some of the process will take time. So it's time to start. It's time to start thinking, analyzing, getting the groundwork put together so that if and when it becomes necessary to make some moves, you can do so in a thought-out, pre-planned sort of a way, and not as a knee-jerk reaction to what seems to be the flavor of the day.
Right. Yeah. Well, and some of the legislation they're talking about putting in place, but making it retroactive. And that creates all kinds of issues. There's some planning that we can do to, in effect, roll the planning back if they do make a change. But it really, again, it just requires a lot of thought and going through some complicated issues that people are not, most of us aren't constitutional law specialists to know what kind of retroactivity is even possible.
Right. When I first started thinking that through, I think you and I actually were on a call or in a Zoom meeting or webinar together, and that you addressed that question straight on. And I'm like, I was thinking, well, there's no way they can do that. That's just not right. And my Norwegian understanding is, yeah, maybe they can if they do it in the right way. And that is problematic. The thought of the government being able to pass a law that in essence takes away something that you had yesterday, or potentially takes it away, that's troublesome. The more recent webinars and studying that I've done and been involved in, the discussion leaders, and you sure hope that we're getting guidance from people who are smarter than us. That's why we're going and participating in these. There's a general thought that I think is growing that what we might consider negative changes that are possibly coming with these estate tax laws, that they maybe are not going to be retroactive, that they would
not
be
back to January 1st.
Not to January 1st. They could happen in 2021, but maybe would be effective as of the date legislation might pass the House and the Senate and get signed by the president. But I was in a webinar a couple of weeks ago where the smart people were really, they were pretty confident that the negative provisions would not apply until 2022.
Yeah.
I guess when we wake up in January of 2022, we're going to know a lot better what the landscape looks like. That's too late to start planning.
Yeah.
We need to start now.
Yeah. Well, I was talking to a family yesterday, and they were bemoaning the fact that they hadn't done some additional planning by year end. And I said, well, that's whatever it is, it's not too late to be looking at some additional options right now. That
Right.
We don't know what the legislation is going to be, but it's not a given that we're too late.
Right. I mean, there are, especially for people with net worths, that are higher, like $15 or $20 million, and if they have particularly if they have kind of a mixture of assets where they have some illiquid assets, probably land in a farm or ranch entity, but also maybe some liquid assets, they should be looking at the possibility of some very aggressive sort of transferring of control of the illiquid assets before any law changes. There's some techniques like potentially intentionally defective grantor trusts, or if nothing else, even a bunch of gifts of a family partnership to multiple family members as some possible techniques to look at. I think we got to always as advisors keep our focus on the big picture too. I worked with an attorney years and years ago when I was a very young person, and he was not so much an estate planning attorney as he was a litigator involved in lawsuits, but he had the old saying of don't let the tail wag the dog. I think very good advice, that's old advice, but very good still, is, don't let the tax tail wag the dog here. If you're looking at transferring assets to your family members and you have some children or grandchildren who might not be in a real good spot to make good judgments with their assets and maybe just not responsible to handle stuff right now, to give value away, to transfer $100,000 of value to somebody in that is in that position, you may end up in essence losing $100,000, and that's not as much. The tax that you would pay on that would not be that much if you didn't make the transfer and you ended up being taxed on it. So you gotta keep some perspective too.
And if you are going to make the transfer, what about leaving it in a trust where you have some management to fill in the blanks for somebody who isn't quite mature enough yet, but
Right.
who we want to benefit?
Right, for sure. Yeah, I think trusts are very powerful tools and flexible, and the as you know, in your legal practice, you do a lot of work with trusts, but they can be individualized by the people that are doing the planning to really match their particular circumstances and come up with the safeguards, the guardrails, and the allowances that match, or they think that will match their situation.
Yeah. Well, as you move toward the end of your career here, what kind of advice generally are you giving your people as far as thinking about the future beyond what we've already talked about today? Is there anything that you've found yourself saying more than once to some of your clients?
Well, don't a multimillionaire never spent their way into high net worth by saving taxes. It's there's no such thing as 100% tax rate or higher. So spending money to save taxes is not a formula for economic success. You need to have perspective. You need to have an overall plan for your business. And I was just talking to a young rancher yesterday, as a matter of fact. He called me to explain how he'd helped his family, and he's the fifth generation on this ranch right now, and he has come up with a plan that is probably going to help them, profit significantly, over $100,000 a year more profit than they've been generating. And he was explaining how he was talking to his father and grandfather about how they should view that. And he says, I was talking to my CPA a while ago at a stock grower or grain grower event, and he said, my CPA said, if you make $100,000 and they take $40,000 away in taxes, you still have $60,000 more than you had the day before. And so he said, I used that with my dad and my granddad. And I said, look, so what if they tax us a little more? We're going to come out with significantly more annual cash flow after tax that we can do a lot of things for this business and this family with. And we need to focus on that. That's not to say don't be strategic. There could be things that they want to do, update a tractor, update an irrigation pivot, maybe update some grain storage or some farm buildings, and do things that add value to the operation and increase efficiencies or profitability. But to just spend money only to save taxes, not a good formula for success. And I heard that a long time ago, and I've passed on that. Hopefully it's words of wisdom. I believe in it, and I think we've got a lot of people we've worked with for a long time who have adopted that philosophy, and they've done well following that.
Yeah. Well, Curt, I just want to take this opportunity to say how much I've enjoyed working with you. What a great job you've done for our clients. It's just been, I'm so glad I met you. We had a chance to work together. I wish you all the best. And if you find sitting out there that you can only do so much fishing and so much golfing and you want to come back to the world of farm and ranch estate planning, we'll be waiting for you.
Right. Well, Keith, thank you. I really appreciate it. It's been a great career. God has blessed me and my family with the opportunity to do something that's really fun and do fairly well at it. And it's been rewarding. And there's so many personal relationships that we've established over the years as a result of getting to know primarily our farm and ranch family clients, and we'll have that forever. So, and good friends like you, Keith, I've always enjoyed working with you, and so well, I'm sure our paths will cross, whether it's helping me untangle my flies in the willow trees, or we're working together with a client deal.
It's a deal. That's great.
All right.
Well, thanks so much for listening in. I hope you've enjoyed hearing some of the words of wisdom from Curt. I think his viewpoint makes a lot of sense for us as we sit here in the middle of the year trying to sort out what to do. And we'll see you next time.